Good evening, I'm Joel Flynn in Hong Kong. Welcome to View TV News. Coming up on tonight's show. Government officials are on the defence today over its decision to lease out part of the rail link terminus to the mainland. The joint immigration proposals face a backlash, with Civic Party's Alan Leong comparing it to the city killing itself. And the US House of Representatives approves new Russia sanctions despite President Donald Trump's opposition. Good evening. Justice Chief Rimsky-Yuen has stepped out in defence of the government's decision to lease a quarter of the West Kowloon terminus to the mainland for the cross-border rail link. That's after pan-Democrats slammed the joint immigration arrangement for violating the Basic Law, claiming the SAR government has no authority to rent out part of its territory to the mainland. Taking to the airwaves this morning, Yuen says the government arrangement is in line with Article 20 of the Basic Law, which stipulates Beijing can grant Hong Kong power it does not possess. The proposal sparked controversy for allowing mainland officials to exercise nearly full jurisdiction, including criminal laws, in the designated area. But Security Secretary John Lee says the measures are necessary to keep the area safe. Chief Secretary Matthew Chung also brushed aside public concerns.
The port will be a closed area, and the railway is built inside a tunnel that links between Hong Kong and Shenzhen. Mainland officials cannot leave the place easily. They also have to leave Hong Kong by trains after each day of work. They can't stay overnight in the city, so the public do not have to worry much about cross-border law enforcement by the officials. Meanwhile, the government has said that passengers will still be able to use Facebook in mainland-controlled areas of the station, despite the social media websites being banned by China. That's in the wake of words from Secretary for Justice Rimsky-Yuen, who said he was unsure about what would happen. That had sparked worries about internet freedoms, which were further exacerbated by a government post on social media, which said any arrangement on access would fall under mainland jurisdiction. Today, however, Transport Minister Frank Chan clarified the official government position. He said there would be no problems as long as people are using a SIM card from a local service provider. Well, despite efforts to boost public confidence, the government still faces a major backlash over the plans. Chung Chau resident Kwok Chuk Kin has filed a judicial review against the proposal, saying it would violate the city's mini-constitution, which stipulates that mainland laws cannot be carried out in Hong Kong. Kwok, known also as the King of Judicial Reviews, has asked the High Court to ban mainland officials from enforcing national laws at the terminus. Civic Party Chair Alan Leong has also voiced his frustration with the proposal and had some barbed words for the Justice Chief.
Article 20 was meant to give extra power to Hong Kong SAR. It's not for Hong Kong to castrate itself. I feel very strange about what Rimsky-Yuen said yesterday. It's like me asking the king to let me die according to Article 20. Then the king approves it, giving me ropes and poison. And I still have to say thank you to the king before I take my last breath.
Meanwhile, in the US, fresh sanctions on Russia could very well be on the cards after the House of Representatives voted for the legislation. That's despite President Donald Trump's objection to it. Senators in the House voted overwhelmingly to slap new sanctions on Russia, as well as Iran and North Korea. House members backed the measure by a margin of 419 to 3, with strong support from Trump's fellow Republicans as well as Democrats. It must pass the Senate before it can be sent to the White House for Trump to sign into law or to veto. The White House said the president had not yet decided whether he would sign the measure. The bill comes as lawmakers look into possible Russian meddling in last year's presidential election and potential collusion with the Trump campaign.
We simply cannot allow any foreign power to interfere in our electoral process. Given our president's complete unwillingness to hold Russia accountable for their attack, and let's not mistake it for anything else, it was an attack on America. It has become necessary for Congress to assert its role in this area and ensure that Russia will be held accountable.
Trump, meanwhile, has issued a warning to Iran: adhere to the terms of the nuclear deal with world powers or face big problems. This comes 1 week after Trump said that Tehran was complying with the 2015 agreement negotiated by then-President Barack Obama. However, the president did make it clear he remains wary of Iran.
The Iran deal, which may be the single worst deal I've ever seen drawn by anybody, if that deal doesn't conform to what it's supposed to conform to, there's going to be big, big problems for them. That I can tell you. You're going to see that.
Trump, meanwhile, will be taking huge relief as the Senate narrowly agreed to open a debate on a bill to end Obamacare. The party's 7-year effort to roll back the former president's health care law still faces significant hurdles. However, Julia Sun has more on this for us from New York.
On Capitol Hill, the Republicans got exactly what they needed to begin the healthcare debate. No more, no less. The math was quite simple. There are 100 votes on the Senate floor, and there are 52 Republican senators, which means the Republicans could not afford to lose more than 2 of their own votes. In the end, the 2 nay votes came from a senator from Maine and a senator from Alaska. They didn't like the possible cuts in coverage for low-income and disabled individuals. That created a 50-50 deadlock in Republicans' favor, and that was when Vice President Mike Pence stepped in to break the tie. When he took the floor, protesters from the Senate chamber's visitors gallery were shouting, "Kill the bill." But for now, the conversation continues. The senators are likely to discuss 2 approaches. 1, a straight repeal with no replacement, or 2, repeal but with some kind of alternative plan or amendment ready to go. It's unclear which approach will be more favorable on the Senate floor, but that's what we'll be watching next.
Well, the spotlight was on Senator John McCain, who returned to the Senate to cast his vote just days after having surgery to remove a malignant brain tumor. Senators from both sides of the political divide gave McCain a standing ovation as he approached the Senate floor. In delivering his speech, the 80-year-old called on the Senate to make a renewed commitment to bipartisanship. McCain voted for the motion to open debate on Obamacare. President Donald Trump, meanwhile, called McCain a very brave man and hailed the outcome.
They don't want anything done for the public.
OK, coming up next, the latest from the world of business. OK, let's start with a check on local market action. There was a bit of a reversal in fortunes for some sectors today here in Hong Kong. Oil and gas plays outperformed, helping to lift the Hang Seng Index to 0.33% increase, up to 26,941 points. Gaming and tech stocks, though, which were yesterday's big winners, found themselves deep in the red. The index did nudge itself above the 27,000 level briefly in early trade, but couldn't sustain the momentum throughout the day. It is still on track, though, for a 7th straight month of gains. Further signs of tightening monetary policy are expected from the US Federal Reserve as it begins a 2-day meeting later. The central bank currently holds a massive amount of mainly government bonds as part of a monetary stimulus policy it began in the wake of the financial crisis. Analysts anticipate the Fed will hint it's thinking of selling many of these bonds off, suggesting the bank is optimistic about the current direction of the US economy. However, Fed Chair Janet Yellen has not been as aggressive with this tightening as many had previously expected, and is likely to hold interest rates unchanged again. Some are still worried about where monetary policy is leading the global economy.
Still, although things are more stable than they were during the last recession, certainly, we have very large amounts of debt and income debt and asset value relative to relatively small income in the economy. That is a problem here. It's a problem in the rest of the world. There's more financial instability coming. I don't think the next bout is going to be coming from the United States.
Now, if the shoe fits, this could be a huge deal for the luxury industry. US retailer Michael Kors says it has agreed to buy British shoemaker Jimmy Choo for a cool $1.2 billion. News of the impending sale sent the shoemaker's stock soaring by 17% to a record high. It will be the 4th time that Jimmy Choo has changed hands. The East London designer brand is famed for its strappy stilettos, which can cost thousands of dollars, and were once a favourite of the late Princess Diana. Many have credited the TV show Sex and the City for the brand's high profile, thanks to the main character's obsession with them. Now, if you're feeling peckish, it might be wise to turn away. McDonald's is having the time of its life thanks to new meals that have kept consumers coming back to the Golden Arches. Quarterly profit has surged 28%, leaving investors with a healthy appetite. Fred Katayama sinks his teeth into this one.
Upscale sandwiches and cheap drinks boosted earnings at the Golden Arches. McDonald's quarterly profit surged 28%, easily beating analysts' expectations. Sales were also a star. In the U.S., comparable sales grew solidly. Globally, strong customer traffic across all segments resulted in the biggest increase in existing store sales in more than 5 years. The results drove McDonald's shares higher at the start of trading Tuesday. RBC Capital Markets analyst David Palmer noted McDonald's strong cash flow, organic growth, and refranchising initiatives, saying, "We believe this combination makes McDonald's a premium consumer staples company." Investors have been taking a liking again to McDonald's stock amid CEO Steve Easterbrook's turnaround drive, now into its second year. The stock is up nearly 25% this year. Among the changes he has recently implemented, selling soft drinks of all sizes for $1 and sandwiches with artisan grilled chicken, using fresh instead of frozen beef, and cooking quarter pounders to order.
Now, if you've ever driven a car in the UK, things could be set to change big time for roads there over the next 2 decades. Britain has said it will be banning the sale of diesel and petrol cars from 2040 as it tries to clean up air pollution that many say has reached dangerous levels. It follows a similar move